Okay, so we're going to go ahead and jump into Chapter 2, and we're going to see that Chapter 2 is going to have a lot of review of some of the things that we covered in Chapter 1, particularly the discussion of the financial statements, the government-wide statements, the fund financial statements, etc. But now we're going to start to add some detail to that so that we're literally going to be taking a look at how some of these statements are put together and understand really the structure, the format of the financial reports. So we were at 30,000 feet last time. We're maybe at 15,000 feet this time, looking more at some of the terrain to kind of understand the structure of the financial reports. And by next time, Chapter 4, we'll literally be starting to talk journal entries. Okay, so at this point we're still at a fairly high level, but pretty quickly we're going to start getting into specific journal entries that would be needed to prepare a set of financial statements that we're going to be looking at their structure here tonight. Okay, so let's just go ahead and remind ourselves that we have our government-wide financial statements, and remember, for the government-wide statements, we have what? We have the statement of net position. Statement of net position is like the balance sheet, and then we have something called the statement of activities that will explain the change in net position. In other words, our income statement. So we have a balance sheet, we have an income statement. Okay. With our fund financial statements, remember we said that our fund financial statements are going to provide us with additional detail. So we're looking for additional detail in our financial reports. Something seems wrong here. Are these things highlighted on yours? Some of these things are highlighted on yours, aren't they? For some reason, I'm not getting the highlighting that I want here. Let's see. Yeah. Show media controls, use presenter view. I don't want that. Any thoughts on what I should be clicking here so that it shows my highlights when I'm in slideshow mode? Play narrations, use timing. I don't think show controls for playing audio and video. Use presenter view. And for some reason it doesn't want to show my highlights. I can't quite figure out what's up with that. But what we are going to do is view this not in slideshow mode by making the slides small, and that looks just about as good, right? And we get the, because I don't want to sit here and try to remember the key points of each slide to try to highlight them, okay? So we have our government-wide statements, and then when we get to what? When we get to the fund financial statements, remember we said that we are trying to provide additional detail, okay? And the fund financial statements are going to give us the detail. Remember we said there are 3 categories of funds. 3 categories of funds are what? And proprietary. Okay, good. 2 out of 3 ain't bad. Okay, so you got our 3 categories. We have 11 funds, right? Okay, and those 11 funds are going to give us detail. Now we're going to take some of those funds and do what? Consolidate them into the government-wide statements, right? Okay. This is stuff we said last time, guys. Don't look at me like, huh? Where's this all coming from? You got to review the material in between classes. I can't reteach it to you every time we start class. So you should be looking at this stuff in between class. Even though I'm not giving you a lot of homework and stuff, you do need to look back at these things periodically to keep them fresh so that I can't reteach everything at the start of each class each time. Okay? All right, good. Now we're at the government-wide statements. As we said last time, we're focusing on operational accountability, right? And we're using the economic resources measurement focus, and we're using the accrual basis of accounting. Accrual basis of accounting is the same type of accounting that you use been using for a long time in all your other accounting classes, etc., right? Okay. Economic resources, we're going to be recording assets, we're going to be depreciating assets. Operational accountability is looking at the efficiency, the effectiveness of this government, right? Okay. Now, when we have the fund statements, we say that what? We're providing additional detail, and it's a set of accounts that are set aside or used to keep track of resources, segregated or set aside for a particular purpose. And remember, last time I kind of showed you the road, and we put what?
Steamroller.
Right, we put a gas tax. Okay, and that gas tax now provides funds that are going to be used for road improvement, right? So the whole purpose of this road fund, probably a special revenue fund, would be to keep track of the revenue coming in. That's the gas tax, and then what? The spending out of that revenue for something like a steamroller or whatever sort of materials, labor, whatever would be used towards the objective of road improvement, right? Okay, so when we deal with our governmental funds, we're talking about, and we said this last time, fiscal accountability as opposed to operational accountability. We're not using the economic resources measurement focus, we're using current financial resources measurement focus. Okay, and we're going to use the modified accrual basis of accounting. And remember, I said last time, our major job, our major hurdle, if you will, in this class is going to be understanding the key differences between modified accrual accounting and full accrual accounting, right? And I gave you the classic example. If we spend money on something like a steamroller out of, say, our special revenue road fund, we don't debit equipment, we debit what? We debit good expenditure, and we paid cash for that, whatever we would credit cash, right? Okay, don't debit equipment. That's the current financial resources measurement focus, modified accrual accounting, because we are taking long-term items like non-current assets, equipment, that sort of thing, and doing what? Treating it as an expenditure, right? We're not going to be reporting it on a balance sheet, etc. Okay, now when we get to our proprietary funds, our fiduciary funds, we are back to full accrual accounting, economic resources measurement focus. So the only time that you've got to deal with this kind of strange approach of modified accrual accounting, current financial resources measurement focus, is when you're dealing with our governmental funds, right? The government-wide statements, the proprietary statements, the fiduciary statements all use full accrual accounting, economic resources measurement focus, and the government-wide statements have what? Have the operational accountability, right? Okay, and so I gave you this slide last time, and I think I put a bunch of stars on it so that we realize how important this slide is, because it really summarizes what we've seen on the last few slides, right? Okay, so we have our what? We have our governmental funds, and our governmental funds are going to be our general fund, special revenue fund, debt service fund, capital project fund, permanent fund. You can remember that by remembering the mnemonic GRASP. That's pronounced GRASP, G-R-S-P-P. Then what? Then we have our internal service fund, that is the S, and then we have what? Our enterprise fund as our proprietary fund, is part of our proprietary fund category. Our fiduciary funds are the custodial funds, the investment trust fund, private purpose trust fund, the pension trust fund is really all you have to remember there. I know they give us O and E for the specific type of pension funds, pension, and other employee retirement benefits. Just remember pension, okay? And so that mnemonic is pronounced GRASP C KIP. GRASP C KIP, okay? Now, notice that we are showing you that for the GRASP funds, we're going to use what? modified accrual accounting, current financial resources measurement focus, and even though they didn't put it here, I'm going to write it in. What type of accountability? Fiscal accountability, right? Okay, modified accrual accounting means there are no fixed assets, no long-term debt, no long-term items. Everything is current. When we purchase equipment, we debit expenditure, don't we? Okay. Then what? When we get to our proprietary funds and our fiduciary funds, we are back to what? We are back to full accrual accounting, economic resources measurement focus, which is also the case when we're dealing with our government-wide statements. We have operational accountability, full accrual, economic resources measurement focus, right? Now, we will report 2 columns of information on our government-wide statements. We will have governmental activities and business type activities, and we do what? We take all of our governmental funds plus the internal service fund, and we roll all of those up into the governmental activity column, right? Then we take our enterprise funds, however many we have, if we have 1, 2, whatever, and we roll those up into our governmental business type activities, right? How about our fiduciary funds? Not reported at the government-wide level, right? Okay, so if you look at this slide pretty much tells you everything you need to know about the relationship between the government-wide statements, the fund financial statements. It lists all 11 funds, the 3 categories. It tells you what type of accounting they use, what is their accountability, whether operational or fiscal, and what is their resource measurement focus, either what? Current for the governmental funds or economic resources measurement focus for everybody else. Question? Yes, sir.
Let's say an entity is authorized funds. They haven't spent it, but they've authorized the funds. How do they report that like at the end of the period?
I'm sorry, you need to repeat that question. I'm not following you.
So you discussed like if you spend something, you debit expense credited cash.
In
Or
the in the
modified accrual.
modified accrual, if I spend money on a long-term fixed asset, guys, there's no just side discussions. You pay attention to your colleague's question. I'm sorry, go ahead.
So I understand that, if in the modified accrual you have the cash, debit expense, credit cash,
Right.
and it's done. But what if at the end of the period they get like funds, but they haven't spent. They just have it. They were given the authority to access funds. It's like a receivable.
Well, if it's usually the way governments get funds is through tax. So if they have tax revenue that they haven't spent yet, then that would be closed out to the fund balance at the end of the year, just like we would close out revenue to retain earnings, right?
Maybe I should state my question in a different way. In modified accrual, are you um, is the entity the government entity recognizing cash when they get the authority, like someone stamps a piece of paper and says, "Yep, you got 10 million," or like they don't report that. They don't report it like under accrual, you know.
Governments generally get money through tax.
So then it seems like more cash basis.
No, it's modified accrual basis, and depending on whether we're recording that at the governmental fund level, then it would be a modified accrual basis. Then, as long as that revenue is measurable and available, we would debit the cash if we receive the cash or a tax receivable. if we're planning to receive that in the future, and we would credit revenue, right?
So the budget is passed. Would that be considered a measurable document?
Governments generally get revenue through tax. Telling me how I'm going to spend that money through a budget process doesn't generate money. What generates money is taxing, right? I mean, how do you think the government gets money? Do you think it falls from the sky? Okay. How does the government, how does it, no, I'll tell you when we'll move on. I'm, I'm running the class. You asked a question, I say when we're done talking about it. Okay? So, how does the government get money?
Yeah, it's from taxpayers.
Okay, so if somebody pays cash, then we would debit cash, we would credit tax revenue, right? Why are you having so much trouble believing that? Do governments get money through tax?
I'm just, I guess I
Okay,
would,
do governments get money through tax?
yes.
Okay, they get money through tax. So when they get the money through the tax, if someone paid cash, do I have to debit cash?
Yeah.
Okay. Do you want me to credit something?
Yeah, that's, you can credit revenue or unearned
Or I
revenue.
can credit revenue? Well, if I haven't earned it yet, then I would credit something called, and it could either be unearned revenue or it could be deferred inflow, depending on the nature of that transaction.
I think that's what I was trying to determine, like, how far of the modified accrual, since there's no fixed assets or long-term debt.
The problem I'm having with your thinking is you're trying to um, eliminate everything you know about accounting from this discussion. If a government receives cash, they debit cash, don't they? Okay, now if cash comes in accounting, my choices are to credit, I can either credit a revenue, or I guess I could credit a liability, or I guess I could credit a stockholder's equity account, right? Okay, we'll get rid of stockholders' equity because we're not issuing stock. The only thing we have is our net position, which is like retained earnings, and we would have to, in order for it to affect retained earnings, we'd have to run it through revenue, right? Right?
Yes.
Okay, so we know we got to debit cash. We know we're not going to credit a stockholder's equity account. So now we're down to either crediting a liability or a revenue, right? Right? Okay, I'm not talking governmental accounting. I'm talking accounting. We receive the asset, we debit cash, we're going to either credit stockholders' equity, a revenue, or a liability. I mean, this is accounting, isn't it? Do you, okay, give me another accounting credit if I receive cash.
What if they have access to cash, but they haven't drawn the cash? It's not in the cash account.
Yes, it is.
So you're going to debit cash even though cash hasn't been
I mean,
drawn?
it could be something called fund balance with treasury or something like that, but it's cash.
Yeah, so that's where I was going. Is like it's not really cash. It's a receivable. It is an asset, but it's not cash because cash would be in the bank. So I was trying to determine, how the extent of the modified accrual to other assets on the balance sheet. And so
Yeah.
that's
So you're getting into accounting of a particular agency within a government, and we're talking about the government. So if there's money that's made available to a particular entity within the government that's in the state's bank account or something, so be it. They may call that a fund balance with the treasury or something like that. I'm talking about the accounting for the government, for the external financial report of that government. You're talking some sort of budgetary accounts, I guess. Okay? I'm talking about the accounting for this government and the accounting rules don't differ significantly from what you would, well, they do differ significantly, but the logic of debits and credits don't change significantly. So if a government is getting tax, they're sitting there and they're debiting cash. I mean, that's the only way a government gets cash or gets money is through tax. Now, or they could borrow, I guess, and if they borrow money, depending on whether we're using modified accrual or full accrual, if we were using full accrual and they borrow money, debit cash, credit a liability, bond payable. If we're talking about tax money that's come in, a revenue, debit tax, credit, revenue, there is no stockholders' equity. Now, we're going to see that there's some nuances of rules if we're dealing with money that has come in but hasn't met certain criteria. They don't call it unearned revenue, but it's sort of like an unearned revenue. They call that deferred inflow. But just like unearned revenue, it's a liability. So again, when we're dealing with the accounting in here, we're dealing with the accounting at the government entity, not what some agency is getting for their use within that particular agency. Maybe that's what the difference is, which starts to get more into budgetary resources that are available, that sort of thing. Okay? Okay, but the main takeaway from this discussion, guys, is be careful about trying to kind of, don't be creative. Okay, don't use your imagination unless I tell you to. Okay, at the end of the day, it's what? At the end of the day, it's accounting, isn't it? If my cash goes up, I debit my cash, right? I've got to credit something. What do I credit? It's down to now a liability or a thing that's like a liability called deferred inflow, or it's an actual revenue, in which case we would call it, we would credit revenue. Okay? Okay, good. Question? Okay, so you've got to have this slide down. You've got to know this stuff. You've got to know the names of the funds. You've got to know what type of accounting they use, what their measurement focus is, what their accountability is. Okay, and then of course you've got to know that my grasp funds plus my internal service fund go to governmental activities. My enterprise fund goes to business type activities at the government-wide level. And government-wide uses full accrual, economic resources, and operational accountability. And I guess they did put that the fund financial statements down here use what? Use fiscal, even though I kind of wrote it in up there. Okay? Okay, good. So you can see, and I guess this is going to look funky here. Huh. Wow, lets me erase the funkiness. Okay. This was our basic reporting model. Any state or local government, state of California, state of Hawaii, state of Mississippi, state of Rhode Island, what? Local government, city of San Jose, city of San Francisco, county of Santa Clara, county of San Francisco, Hayward, okay? Any primary government will prepare this set of information, right? How do we know if we have a primary government? Huh? How do we know if we have a primary government? If you're a state, you are automatically a what? Primary government, right? If you are a general purpose government like a city or a county, you are automatically a primary government. Good. If you are a special purpose government like a school district or something, do you have that singular special purpose to educate children or whatever? Then you become what? Then you only become a primary government if you have a separate elected governing board, you're legally separate, and you are fiscally independent. If you don't meet all those criteria, what are you? You're a child, you are a component unit, right? Okay, and if you're a component unit, then you appear on the financial reports of a primary government, right? Okay, but every primary government has to provide this set of information. The MD&A, which is required supplemental information, the what? The government-wide Statements, the fund financial statements in the notes, there are two. That's the two next to that because we have that second. That's the second thing you see, right? Then you have your notes to your financial statements, which are going to be part of the basic, constitute the basic financial statements. That whole thing constitutes the basic financial statements, that whole middle box. And then you have required supplemental information other than the MD&A, right? What does required mean? You have to provide it, right? What does supplemental mean? It adds to something else. The only other thing that's up here on this chart is the financial statements, right? So the MD&A and the RSI are financial type documents in nature, aren't they? They're just providing what? Additional information that adds on to the financial statements, supplemental information. Okay? Okay, guys, remember I told you that I will know if you're not concentrating on the material, if you have any signs of interest or happiness on your face at all while you're looking at your computer screen. It shouldn't take you 3 hours after I stand in the back of the room to find what I'm looking at. So in this class, we focus on what? Governmental and not-for-profit accounting, right? Just to make sure you know which flight you're on here. All right? Okay, good. Now, what I'm going to do at this point is take a little time to kind of scroll around a little bit, and let's see if we can find the city of San Jose Comprehensive Annual Financial Report. What does that stand? How do we pronounce that? CAFR. Okay, we should be able to get the CAFR for 2018 by now, yeah. Okay, so Comprehensive Annual Financial Report, City of San Jose. Most recent CAFR. Okay. Am I missing something? There it goes. It's a little slow. What's that, the library or something?
It looks like the town hall.
Town hall? City hall?
Yeah.
Okay. Isn't that beautiful?
I like the architecture.
Right?
Looks like the Berlin Reichstag.
Okay. I haven't been to that one, but if you say so. Okay. I'll be darned. Comprehensive Annual Financial Report has an introductory section, a financial section, and what's that last section that we learned about last time? It has a statistical section. Okay. Of course, they're going to make us scroll a bit before we see that statistical section. There it is. Right? 3 sections. We talked about the Comprehensive Annual Financial Report last time. Okay, good. So let's go ahead. Ah, there it is. This page is definitely left blank, not that. There it is. Introductory section. I'll be darned. This is the transmittal letter. Okay. Remember we said there has to be a transmittal letter transmitting the financial report from the legislative branch to from the executive branch to the legislative branch. So here's the transmittal letter. And I'm going to try to speed this up a little bit. Not that the transmittal letter isn't interesting. There it is. The reason we prepare this CAFR is so that we receive this award, because we are not required by GASB to prepare it. We prepare it optionally, right, the CAFR, and we then follow the requirements of the Government Finance Officers Association, and we get this award, right? Now, sometimes students will say, well, why do we have to get the award? Try it sometime. Try it, go ahead. You work hard, you get your degree here at San Jose State, you get your CPA, you are then appointed or you are hired as the CFO of a big city like San Jose, San Francisco. Try it sometime and say, oh, I'm not going to do the CAFR this year. Okay, that's not happening. Okay. There he is. Pictures of the politicians. Have you ever met a politician that doesn't want their picture taken? Well, it kind of depends what they're doing when that picture is taken, but generally they like to have their picture taken, okay? Organizational charts, etc., blah, blah. Kind of stuff that we said last time would be in that introductory section, right? Okay. All right, financial section. What's supposed to be here? Beautiful. Spoken like true prodigies. Now, MGO is the entity that audits San Jose. They lost it. They lost the audit for a second, and then another firm took it over, and the other firm dropped the ball. They didn't do a good job on the audit, and then San Jose went back to MGO and said, will you take us back? I'm sorry. You were the right one for me all along. Okay, whatever it was they had to say. And now MGO is back. Now, I don't know if MGO will be at Meet the Firms or not. I'm hoping to potentially maybe get them over here to talk a little bit about some of the work they do. They can't give us inside information or anything, but generally about the nature of some of the work they do. They also do City and County San Francisco as well. And they'll be at the Meet the Firms. Blah, blah. This is not an auditing class. I'm not going to get into. Someone asked me yesterday, are there any CPA firms in the East Bay? And I said, yeah, MGO. Okay, they're out of Walnut Creek. There it is. MD&A. Okay. Financial highlights. It is a financial document, isn't it? They're not sitting here saying, oh, San Jose has the city hall that looks like, would you call it the Lushkinshushin or something? Whatever. Okay. Now, they include some information in there from the financial reports. Okay, so they're allowed to present some financial excerpts from the financial reports, from the financial statements themselves in there. Okay. Now, you come down. Management discussion analysis, blah, blah. Here we go. What should be next after the MD&A? Basic financial statements. Good. And should we see a set of, page intentionally blank, should we see government-wide statements? Should we see statement of net position? Is a government-wide statement. Should we see governmental activities, business type activities? Okay. There's also an operating statement down there, which is called the statement of activities. We'll talk more about that later. Reconciliation. I showed you the reconciliation last time a little bit. We'll do this after Chapter 8, but there's a reconciliation from the fund financial statements to the government-wide statements. That's why they have that arrow going back and forth. Okay. This is a pretty complicated reconciliation. We won't have to do anything nearly that complicated. Here we go. Governmental funds. This is the statement of revenues, expenditures, and changes in fund balance for the governmental funds. They also prepare a balance sheet.
Those numbers are all in thousands, right? Or does the city of San Jose really make that little?
No, they're it's in thousands. Yeah. Okay, proprietary funds. Okay, fiduciary funds are coming next. Why do you say no? No, no, no. They're not consolidated up at the government-wide level. They're reported at the fund level. We're down at the fund level now, aren't we? So we would see the fiduciary fund. We just don't consolidate them under governmental activities or business type activities. Right now, we are now in the fund level statements, right? So the fiduciary statements will show up. That's the statement of cash flows for the proprietary funds. Fiduciary funds? Okay. All right, good. So we've seen our fund financial statements. What's next? The notes. And the notes go on and on and on and on. Wasn't that a song? Although it was sang more enthusiastically, I think, some of the police. Now my lover goes on and on, but here we'd be saying, and it goes on and on. What would you do if you were working for MGO and they said, why don't you go ahead and put together the notes to the financial statements?
Use last year's as a base. Probably.
Well, first of all, you wouldn't prepare it if you were MGO. You would be what? With the notes, the financial statements, we have a responsibility to make sure that what the information there is correct in accordance with what we saw in the audited financial statements. Okay, so we'd probably be checking some key elements of it. It's actually, of course, the city itself that prepares it. Huh?
Just wondering, unless there's like a huge, like San Jose goes through something super big though, wouldn't a lot of the notes and just the general positions and stuff say it's like look similar to the previous year?
Yeah, they generally do, yeah. What comes next? Required supplemental information other than the MD&A now, right? And it gives us stuff like comparison of budget to actual. So remember, the MD&A was more words, wasn't it? Where here we're actually seeing some numbers that are comparing one item to the next at a higher level, more granular level, if you will, of detail. Okay? Now what should we see? Good. Statistical section comes next, doesn't it? Here it is. What's that? Oh, those are combining statements. I'll talk for. There's something called non-major funds that we'll talk about later, in which we provide combining statements that roll up into the full financial statements. I'll talk more about that. Okay, but the next thing should be what? After the combining fund should be somewhere in here.
General service funds.
There's no such thing as a general service fund. We
It
have
says
government.
internal service funds.
We already looked at the internal service funds. We looked at the proprietary fund statements, didn't we?
Section, I'm already there.
Okay, you found the statistical section?
It's on page 299.
Egads. Really? There's 299 pages in this stupid thing?
322.
The hell's wrong with them? Okay, all this is combining statements, guys. If you're saying, hey, how come I'm seeing fiduciary funds or, like you said, internal service fund? Because they don't report every single fund on the face of the financial statements, or they would just be boggle the mind. So what they do is they'll have summary columns for smaller funds that fall into our categories, and then they report one column for the smaller ones, and then they show the detail in these combining statements. Okay, but I'm trying to find the statistical section. What did you say, 399? 299, there it is, statistical section. And it has everything you ever wanted to know about this government or afraid to ask. Trends, debt capacity, blah, blah, year after year after year after year after year. All that just so you can have that one page with that award, right? Because this is what? This stuff is optional, although you did have to prepare the what? Under GASB requirements, the MD&A, the basic financial statements, and the required supplemental information. Other than MD&A, this rest of this stuff that was sandwiched around it was all optional, right? Okay? Question? Okay. So that just kind of gives you a sense as to how the things that we're talking about here are going to parlay into an actual financial report that is audited by a company that CPA firm that you may very well talk to, meet the firms, and end up working for someday, right? Okay. Okay, so let's go back now, back to the slides. By the way, I borrow these slides from somebody who puts them together, not these slides, but the financial reports that we use to learn from someone named Tom Cox. I don't know why Tom's wife hasn't divorced him yet, okay? Because what he does is he sits there and he actually builds a set of example financial reports from the ground up. The man's insane. Okay, he sits there and he has a set of combining statements that combine up into that one column that's on the on the face of the fund financial statements. All that, nobody else in the textbook industry does that. Okay, what everybody else does is they hurl the financial statements of an actual thing like San Jose to you, which are way too complex. I mean, at a high level, we can kind of get a sense as to the structure, but to try and learn from those is nearly impossible, right? So we've got a real benefit, thanks to Tom, that we're going to be able to go through and see how those financial reports that we just looked at work in an understandable, bite-sized, education-focused type format. Okay, so we'll be looking at all those. But let's look at the MD&A, and we will do what? Talk about our financial position, talk about our financial operations, both what? Our balance sheet and our income statement. Okay, now what happens? We'll provide an overview of the government-wide statements. We'll provide an overall summary of the government's revenues, expenditures. That was the type of stuff that we saw in that MD&A, right? When we looked. Okay. We will have an economic conditions and outlook section. Okay, now this particular one that I took was back some time ago when California's economy wasn't doing as well. There were plummeting home prices, and those plummeting home prices were affecting the state of California's ability to generate certain revenues, etc., right? Property taxes were down, all that sort of thing. Okay, so under those circumstances, that would be a sad economic outlook. Now, I would imagine that what? We're probably seeing more happy faces in the economic conditions and outlook section. Okay? All right, so that's the MD&A. Okay, then what? Then we have our government-wide statements, and we saw that there are two of them. One is the balance sheet, the other is the income statement. Or it's like the balance sheet, like the income statement. We don't call it balance sheet. We don't call it income statement. The balance sheet we call statement of net position. The income statement we call statement of activities. You've got to know the names of the statements, guys. You've got to know the names of the statements. We don't call it balance sheet. We don't call it income statement. Balance sheet, the like balance sheet thing, we call statement of net position. The like income statement we call the statement of activities. Okay? All right, so we take a look, and we know this already. We use what? Accrual basis, economic resources, measurement focus, and we already know that we have two columns. We have our governmental activities and our business type activities. Okay? Now, we put our internal service fund in with the governmental activities. Okay, now why do we do that? Because you look at that and that gets a little confusing sometimes, right? And that we sit here and we put all of our governmental funds in governmental activities. Well, that makes sense. Governmental funds, governmental activities. At least we're matching the word government there, right? Okay. But why do we take a proprietary fund and include it with the governmental activities? We take our internal service fund and include it with the governmental activities at the government-wide level. Why do we do that? Well, the customers of an internal service fund are the other governmental funds. The customers of the internal service fund are the other governmental funds. Just look at the word, internal service. It's service that's being providing what? Inside of the government. It's not service that are being provided to those outside the government. It's services that are being provided what? Internal, inside the government. Okay? For example, do cities own vehicles? Okay? Let's hope there's not one behind you on Friday night when you're trying to make it back home, right? Okay? So what? Police cars are city-owned vehicles. What? Fire trucks are city-owned vehicles.
Ambulances?
I don't know. Do they own ambulances? In the city, do they have city ambulances? I don't know. Okay? Huh? They tend to be private, okay, but maybe they, some cities might have ambulances, whatever. But these tend to be buses, right? The county buses, these type of things, and these are items that we want to make sure run. They're emergency type vehicles, or they are dealing with carrying the public, that sort of thing, right? So what do? We don't want to take them out over to Moe's garage, where they're going to be cared for poorly. So we create a central motor pool where all city vehicles are maintained, repaired, that sort of thing, right? So what happens? You can't drive your car and say, hey, I heard a little backfire. Can you take a look? They're going to say, hey, get out of here. We got only police cars, only fire trucks that we take care of here, right? Okay, so when those vehicles come in for service, the funds are charged for that service. The funds are charged for that service. So it's sort of like a business, isn't it, that's running inside of the government, even though the customer is the government. So it makes sense to put it in a proprietary fund. Proprietary fund is sort of like business type fund. But when we sit there and we consolidate, we don't put it with the business type activity. We put it with the governmental activities where it more appropriate belongs, because the customers are the other governmental funds, right? Okay? Okay, good. Now when we're dealing with what? Enterprise funds, which we know go in business type activity. Enterprise funds, for the most part, the customers are entities and businesses and individuals that are outside of the government. For example, let's say you don't pay your water bill. What happens to you? They'll shut it down, right? You're sitting there on a Saturday night getting ready to go out. You say, man, I'm going to look good tonight. Let me wash my hair. And all of a sudden, turn it back on. I have soap in my eyes. The government says, turn it back on. Pay the bill. We'll turn it back on, right? You guys have this problem. I don't. Okay? So what happens? You sit there and you get cut off because the city can't run that water service unless you pay your bill. Well, that's much more like an actual business now, isn't it? Okay, because it's those outside of the government mostly that are using that. And so that's going to be what? Business type activities. Okay? Fiduciary funds are what? Not reported at the government-wide level. Why? Do the pension assets belong to the government? No, they belong to the employees. So anytime the government is keeping track of an asset, managing an asset on someone else's behalf, they have to report it at the fiduciary level, yes, to show that they're exercising their fiduciary responsibility. But when we get up to the government-wide level and we're interested in operational accountability, how well you manage someone else's assets has nothing to do with your efficiency and effectiveness as a government providing various services. And so they exclude them at the government-wide level. Okay? These are all things we've known already. Now, just focus right here. Focus on the statement of net position I don't know why I wrote all this on this side. Don't worry about this on this side. Just worry about the right-hand side of this panel, statement of net position. Okay? Now, do you remember your favorite song? What's your favorite song? Huh? Beautiful. I remember when you were in Accounting 100. Assets equal liabilities plus what? Stockholders' equity. Good. Beautiful. Your favorite song. Is it true then that assets minus liabilities equals stockholders' equity? That's also true, isn't it? Okay. Now, when we're dealing with a government, our stockholders' equity is like what? Just retained earnings, isn't it? But we don't call it retained earnings. We call it what? Good. Net position. And the format that we will use to show that net position on our statement of net position is by showing the net position simply as the difference between our assets and our liabilities. Remember last time I got a little bit confused because I was trying to say, hey, how come all the assets don't add up to the net position? And it was because what? We don't take don't add up to a bottom line at the bottom of the statement of net position like we do in a commercial version of a balance sheet. We'll show what? We'll show our total assets, then we'll show our liabilities, we'll show our stockholders' equity, and then we'll show that number at the bottom that is the sum of the liabilities and the stockholders' equity, the total that match to the balance of the assets. Okay? With government, we don't do that. We simply show, and the reason we're calling out all assets, all liabilities, is just to distinguish from our governmental fund balance sheet, which just shows what? Current items. Only shows current assets and current liabilities. So that's why we're saying all assets, all liabilities, both long-term and short-term. The difference between the assets and liabilities equals what? Net position. Net position is like retained earnings. Okay. Now, this part that I underlined in blue, deferred inflow, deferred outflows. Deferred inflows are kind of like prepaid items, but different. So they are not quite assets, but they're kind of like assets. Are prepaid items assets? Are prepaid items assets? I mean, they're the most descriptive version of an asset. Asset has future economic benefit. If you've prepaid something, you're saying, I have future economic benefit, right? Okay. So deferred outflows are money that I've paid that's sort of like an asset, but not quite. And so I don't put it with my assets, but I put it next to the assets. Okay. Then we have our liabilities, and then we have something called deferred inflow. Okay, now what happens? This is money that has come in. It's not quite a liability, and it's not quite a revenue yet. So we report it on the balance sheet right next to the liabilities. Okay, so in government, we have this in-between in unearned revenue and revenue that we call deferred inflow. And we will be dealing with this quite a bit next week when we get to Chapter 4A. When we start talking about revenue recognition, we're going to have to understand what the difference is between a deferred inflow, an unearned revenue, and a liability. Okay? But on the balance sheet, we're showing what? All assets, current and non-current. All liabilities, current and non-current. We've got these deferred inflows, these deferred outflows that we'll talk more about later, and we report the net position as the difference between the assets and the liabilities, right? Okay. Now, just because I have students that start freaking out about, I didn't understand anything that he said about deferred outflow, deferred inflow. I'm going to show you this graphic now just to kind of have you picture it in your mind as to how it works. We're going to talk more about it in Chapter 4. Okay? Now, first part Do you see this caterpillar? Okay, and the caterpillar someday wants to be a butterfly, doesn't it? Okay, and so a caterpillar does what? It goes into a larva stage where it turns into a cocoon, and then it goes from the cocoon to a butterfly. Okay, now using that as a metaphor, okay, our revenue is a butterfly. Okay, the liability, and you don't call it deferred revenue, you can call it unearned revenue, you could call it revenue collected in advance, is the caterpillar. Okay, that's a liability. That is very similar to unearned revenue in commercial accounting, isn't it? But what government accounting requires is that we talk about a situation where that revenue is not a revenue yet, but it's no longer a liability. It has gone further along the continuum towards a revenue, and so we separate it out and we call it a deferred inflow. So we're going to have to deal next time with understanding this continuum along the revenue recognition. Money comes in. If we haven't met any of the requirements yet, it's considered a liability and unearned revenue. We don't call it deferred revenue. We call it unearned revenue. We can call it revenue collected in advance. You don't call it deferred revenue because they've saved the D word, deferred, for what? Deferred inflow. As the situation with that cash that's come in changes over time, it gets closer to a revenue, so we have to call it out as something closer to a revenue. We call it deferred inflow. And then when it finally meets all of the requirements, it goes from a deferred inflow to a revenue. Okay? All right, so we put it with the liabilities because it's kind of like a liability, but not quite. And we'll talk more about that next time. Okay, now you come over and we have what? This is a little bit sloppy, but we've already seen this anyway. We take our what? We take our general fund, special revenue fund, debt service fund, capital project fund, our governmental funds, plus what? Internal service fund, and we roll it up into the governmental activities. Good. Then we take our what? We take our enterprise funds, we roll them up into business type activities, don't we? Okay, now over here, these are the special purpose governments that didn't meet the self criteria, our children, our component units. And remember, when we display them in a column like that, that's what? Discrete presentation. We talked about that last time. Okay, now we have both current and non-current assets. Right, 8,493,000, whatever. We have our liabilities, both current and non-current, totals 4,763,000. And then notice when we get down to our net position is like our retained earnings. That says like RE is like our retained earnings, but we don't report the sum of the liabilities in the net position like you would in a commercial balance sheet. We simply report the net position as the difference between what? Between the assets and the liabilities, don't we? That's the recommended format for reporting things on your statement of net position of the government Y level, that you show net position as the difference between your, and it's your assets plus your deferred what? Deferred outflows minus your liabilities plus your deferred inflows. Difference equals the net position, right? Okay. Now remember, last time I showed you the net position for our business type activities, 1,835,000. Remember I showed you that? And then we zoomed down to our fund level, our fund financial statements, and we went to our proprietary fund statements, and we saw that we had what? Two enterprise funds. We had parking, water, and sewer. We add those together, that gives us these totals, and the total is going to be what? 1,835,000. Okay. Okay, good. Now, something I forgot over here. When we report our net position, we report it in, yes, sir.
So I noticed on there typically that the utilities under the business type activities.
Uh-huh.
So I live in Santa Clara and I pay my electric bill to this Santa Clara electric company.
Uh-huh.
Would that be an internal service fund since they own
No, that's an enterprise fund, because most of the activity that goes on there is dealings with those outside the government. Typically, internal service fund, you're dealing with those inside the government, thus an internal service fund. Now, there could be some enterprise funds where they, some internal service funds where they treat it like business type activity, but that's the exception. Okay, so that's when you pay your electrical bill, not PG&E, but if you're paying it to some government named entity, that's going to be an enterprise fund. Okay? Now, we add those together and we get here. Oh, something I forgot to show you here, though. On the what? On the statement of net position, government-wide statement, when we have our net position, we report it in three categories. We report it as restricted, unrestricted, and net invested in capital assets. And I've given you a mnemonic there: run, restricted, unrestricted, and net invested in capital assets. Now, what happens? This is very similar to what we do with retained earnings, because net positions like retained earnings. And with your retained earnings, can't you have what? Unappropriated versus appropriated retained earnings? Right? If the retained earnings is being set aside for some purpose, you might call it appropriated, right? If it's free flowing, can be available to pay dividends in that, you'll call it what? Unappropriated? Okay? Well, governments do something similar in that if there's a restriction on the use of that net position, then they're going to call it obviously restricted. If it is unrestricted, they'll call it unrestricted. And invested in capital assets net of related debt, they like to break out the difference between whatever they have invested in capital assets minus any outstanding debt on that, and they will report that out as a separate section of their net position, right? We have an asset, but if there's debt, assets minus liabilities equals net position, doesn't it? So that category of net position called net invested in capital assets is the difference between any assets and any related outstanding debt. Three categories: restricted, unrestricted, and what? Net invested in capital assets, and that is remembered by the mnemonic run. Okay? Okay, good. Notice that we do the same thing with our statement of net position for our proprietary funds. So even though we're down now, what? We're down at the fund level, dealing with our proprietary funds. Notice the format of the financial report is exactly the same as it was for the government-wide. We call it a statement of net position. Assets minus liabilities equals what? Net position, and then we break that net position into three categories: restricted, unrestricted, and net invested in capital assets. So the government-wide statements and the proprietary fund statements follow a very similar format, don't they? At least for the statement of net position. We're dealing with two levels here, guys. Don't get confused. This is government-wide, and all I did was jump down to what? This is the government-wide statement, isn't it? Okay, statement in that position. And all I did was I just reminded you how we have this additional detail at the fund level just for our, and I'm just showing you for our proprietary funds and how our enterprise funds roll up into that business type activity column, right? Two levels here that I've shown you. Okay. Okay, good. Now, we have our governmental funds. And when we deal with our governmental funds, it is what? Current assets and current liabilities, isn't it? Current assets and current liabilities? Okay, so there are no long-term liabilities here. It's all current items. No long-term assets here. It's all current items. Okay? Now, notice here we report the total of what? Of the liabilities and what we call fund balance. Fund balance is like the retained earnings of the governmental funds. So we have a different format. See, our total assets, although they're current, is $2,087,000. Then we have our liabilities. We list the current liabilities. Then we have our fund balance. Fund balance, you see how that says is like RE? So the fund balance is like the retained earnings for our governmental funds. We add our what? Fund balance to our total fund balance to our total liabilities, and that gives us $2,087,000. See the difference in format? At the government-wide level, we reported that as what? We reported the fund balance as the difference, or the net position, I should say, as the difference, and we stopped, didn't we? Here we go ahead and we add the fund balance, which is like net position, which is like retained earnings for our governmental funds, and we do what? We then go ahead and add the liabilities to that, and we report that total. Question? Okay, now, notice we have what? We have our total fund balance here is $4,195,000 for all of my governmental funds. Notice my governmental funds are my general fund, my special revenue fund, etc., right, going across the top. And then we have the totals, and we have the total for all of my governmental funds, don't we? $4,195,000. And then we report the total of the governmental funds, $4,195,000. You can see that number comes down, and it comes down into the reconciliation. So we show what? We show the total governmental fund balance, and we start doing things like what? Adding equipment. Because what? We don't report equipment at the fund level. We do report it at the government-wide level, don't we? So we add in the equipment. I showed you that last time, how that reconciliation would work with $1,000, whatever. So we start to adjust, and when we adjust, we come to the total net position from governmental activities, which you see down here. And so when you look at this whole thing, it ties back up to what? To the government-wide net position, doesn't it? That's that little double arrow that goes back and forth. Remember, I also showed you the reconciliation of San Jose's financial reports? So we have to show the relationship between what? Between our governmental statements, our fund financial statements, and what? Our government-wide statements. And the way we do that is through the reconciliation. We start with fund balance, and then we start making adjustments that what? That constitute the difference between modified accrual and full accrual. The main one we understand right now is what? That we're not reporting the fixed assets. So we would add fixed assets, and we make other adjustments until we come to that number that's reported, which is a full accrual number, net position at the government-wide level. Question? Okay. Okay, good. This is the statement of activities. No, there's no feeling sorry for yourself. There's no feeling sorry for yourself in accounting. Okay. You look at the information, you understand it. Okay. You don't sit there and go, oh, I can't do this. Okay. Now, let's take a look. We have our primary government. We have what? We have component units. So this is like the income statement, right? You look, and we have what? Something called governmental activities, something called business type activities, don't we? What's in the governmental activities? General fund, special revenue fund, debt service fund, capital project fund, internal service fund, right? What's in the business type activities? Enterprise funds. Where's KIP? Not reported at the government-wide level. So now we're looking at the income statement. Remember, I kept saying we have a balance sheet, we have an income statement. We've had the statement of net position. That's our balance sheet. The statement of activities is our income statement, right? Okay. Now, we start reporting different government programs. This is how we lay this out, is by our different government programs. So public safety is a government program. Does the government keep you safe? I always get people saying no. Okay, if you made it here so far, they've done their job. If you make it home tonight, they've continued to do their job. The day you don't make it home, the government didn't keep you safe. Okay, so they try. Now, I heard about there was this thing on the news that they found a suitcase in the middle of Market Street in San Francisco. When they opened it up, there was like body parts in there. Okay, they didn't keep those people safe, okay, or a person or whoever it was, okay. But if you make it home in one piece, they kept you safe, okay. So they have this public safety. Now, what's weird about the income statement, the statement of activities for our governmental funds, is the first thing they report to you is expenses. We're used to what? We're used to a income statement starting with revenues, right? But that's because you spent your whole life so far, your whole education so far, dealing with how to determine net income and revenue, and it's all about making money, right? In government, it's all about how did they spend the money that they got, right? So we start with the expenses. Now, when you look, this government spent $1,025,000, and I guess it'd be in thousands, whatever, but just let's deal with the numbers that are here. $1,025,000 in on public safety, paying police, buying police cars, all of those things, right? Okay. Now, what happens? We have this column here called charge for services. Charge for services. Charge for service is an example of an exchange revenue. See that line and it says exchange revenue there? In which you pay money and you get a service back from the government. You pay money and you get a service back from the government. Now, how can this government have a situation in which people are paying money and then getting public safety back? I mean, what is this? Somebody got, huh? No. No, got hit by a cop. No. No, that's probably going to be down in the law section. Okay. I mean, what is this? You know, help, help, somebody stole my purse. The police come, yeah? Go get him, he's over there, he stole my purse. Well, do you want us to chase him on foot or in the car? Because the car is going to cost you a little more. Okay? And for a little extra, we can make this person pay the ultimate price for this. No, that's not how the police work. You know, you pay your tax, you expect them to be there, don't you? Okay? But there are some activities that fall under public safety in which you pay for it. For example, let's say you want to, protest down the street here and say, no more governmental accounting class in San Jose State, or whatever, right? If you sit there and you just start doing that, they'll come say to you, this is an unlawful assembly. You are to disperse immediately, right? And they'll make you disperse, right? But if you get a permit to do that, then they'll stand next to you and protect your righteous, to go ahead and protest if that's what you want to do, right? And nobody can stop you from doing that, and they'll protect you to do that. But you got to pay for that, a permit, don't you? Well, that might be an example of a charge for service that falls under the public safety program that's helping to defray some of the costs that they had to pay for that public safety, right? Yes, sir.
Yeah, I just read that sheriffs, you want to serve a suit,
Yeah.
you pay the sheriff because they used to do it for free, but no longer.
Okay.
To serve like someone to go to court.
Yeah. That'd probably be a charge for service when you have the sheriff come and do that. $150? Yeah. Yeah. One time my brother sued me, who I don't talk to anymore, and he wanted to get the sheriff to come. He wanted to embarrass me, so he wanted to get the sheriff to come to my office to serve me. It's a long story. He got thrown in jail, and he had like a bunch of junk that we went to his apartment to get, and then he sued me because he said I stole his junk that we had gone to his apartment to get. Anyway, probably cut. Okay. Anyway, so what was the story? So he tried to have them serve me, the sheriff served me, and the sheriff couldn't come on federal premises because I worked for the federal government. So then he had to go and get the U.S. Marshal to do it. So the U.S. Marshal came and served me. But I would imagine these days now, and the thing that was so stupid about it is you came to the front desk, and the person at the front desk was a good friend of mine. She called and said, you know, the U.S. Marshal's here. And I think that's as far as it went. He was trying to embarrass me, and it ended up being somebody that I was good friends with that received the Marshal. Anyway, okay, cut. Okay, that won't be on the test. Anyway, so yeah, that might be a charge for service, though, right? Okay, so what happens? You sit here, and you have what? You have the cost of providing public safety, both direct and indirect cost, the indirect cost allocation. But then we have what? We have charge for service, which helps defray these costs, right? So net, this government spent on public safety $982,000, didn't it? Because we had the $1,025,000 plus the indirect costs that got allocated minus this $78,000 charge for service. We had net costs of $992,000, didn't we? Okay. Now what happens? Look at all these loser programs. Every single program lost money, didn't it? Every single program lost money. So what do governments do to cover the cost of the services they provide? They tax, don't they? And so you have what? You have on the bottom part of this statement, you have your general revenues, which are essentially your taxes. So this is sort of like an upside down income statement, isn't it? In that we report our expenses, although we do have our program revenues up there that help defray some of the costs, but then we what? Put most of our revenues at the bottom so that you can see how your tax dollars went to cover what? Cover these government programs, right? Okay. Now, when you go back to our program revenue, there are three categories of program revenue. There's charge for services, which we just talked about. There's operating grants, and there's capital grants. Okay, what are the nature of some of these things? Now, this government didn't get any under public safety, and they should hire me as a consultant because they could have applied for money under a program called the COPS program. This was a program that was put in place by the Clinton administration. When Clinton was running for president, he kept saying, I'm going to put 100,000 more police officers out on the street. Okay, and so it was like, okay, well, how are you going to do that? I don't know, but I'll make sure it happens. So they came up with this COPS program in which the federal government provides money to local police, and they can get money to pay police salaries, but they can also get money to invest in capital items. For example, they can invest in the CODIS system. The CODIS system is what? The system that contains fingerprints, DNA on the national basis. And so if a crime is committed somewhere and someone leaves the DNA behind, they can do a match. Now, I told my dad, when a child is born, they should automatically take their DNA and put it into the system. And then you can tell a child from the minute they're old enough, now don't do anything wrong, never do anything wrong, because they have your DNA in the system and they'll know that you was you. So nobody will ever commit a crime. I wanted to see what my dad's reaction would be. You can't do that. That's against the Fourth Amendment of the Constitution. That's illegal search and seizure. They have to have suspicion to do it, and college is a suspicion. Well, okay. Just checking to see if you're paying attention, Dad. Okay? All right. That's right. So they can't do that, okay? But if they had what? They let them invest in that computerized equipment that helps them do that. That's all under public safety, right? So if it's to pay salaries, that sort of thing, it's an operating grant. If it's to purchase equipment, now they give them money to acquire drones. So these drones can fly around and, monitor the fillings in our teeth. Okay, they haven't gone that far yet. Okay, but whatever it is that the drones do when they monitor, right? Someone flying over your backyard taking pictures. What are you growing back there? Okay, whatever. All right, so what happens? That would be a capital grant, wouldn't it? Okay, so if they had gotten some money from that program, then that would have also defrayed the cost of public safety costs. They only had program revenue. These are all program revenue. They only had charge for services here. But I gave you another mnemonic here so you can remember the categories of program revenue, which is what? Charge for service, operating grant, and capital grant, right? Okay. And then we've got this upside down. Let me back up. Exchange revenue is a charge for service, I should say, is an exchange revenue. Okay, when you get into your operating grants and your capital grants, these are government mandated and voluntary non-exchange. Okay, now what is a voluntary non-exchange? What I've described to you would be an example of a voluntary non-exchange because you have to apply to that higher level of government to say, please give us some money for our COPS program. We want to apply. We want that money, right? And then they'll approve that. Okay. A mandatory non-exchange, government mandatory non-exchange, is when the higher level of government tells you to do something and gives you the money for it. For example, can the state tell counties that they have to clean up pollution? Yes, they can, because what? Your county's next to mine, and I don't want your pollution spilling onto my county. And they don't want the counties going to war against each other, so what do? The state says, here, clean up that mess, County X, and here's the money to do it. Well, that's a what? Government mandated. They have to do it, don't they? Okay, they have to do it, and when they get money for that, that would be reported either as an operating grant or a capital grant. Okay, so we have what? Charge for services. We have operating grants. We have capital grants. Our charge for service is an exchange revenue. Our what? Our operating grants and our capital grants are either they're non-exchange and they're either voluntary or mandatory. They call them non-exchange because what? The government doesn't do anything and people just give them money, don't they? In those cases. Okay? And then we get down to our tax. Our tax is also non-exchange. The government doesn't do anything. They send you a bill and they say, pay your property taxes or I'm going to take your house. That's non-exchange, isn't it? Now you expect them to be there when you need them, though, right? Okay. Now notice we took the difference between our expenses and our revenues, and we call that change in net position. Change in net position, this what, 794,500 number, is like net income. But we don't call it that. We call it the change in net position. So this government had some money left over, didn't they? Didn't they have some money left over? Now, I taught this class one time, and somebody stopped and said, the government owes the people a refund for that money. Okay, young Rush Limbaugh, whatever you want to think is supposed to happen with that money that's left over, I just want you to understand that's like net income, isn't it? Okay? Okay, good. Now, you come over. Let me back up. So that wasn't so bad after all, was it? Huh? Everything I showed you now, here it is on the slides. Okay, so you take a look at the slides and we have what? We had program revenues. Program revenues were what? Charge for service, operating grant, capital grant. Charge for service was an exchange revenue, like paying the sheriff to deliver your papers to your brother. Okay, operating grants and capital grants were non-exchange, weren't they? Okay. We had what? General revenues, which we saw were on the bottom of that upside down income statement. It was mostly taxes, right? Okay. Again, charge for service, operating grant, capital grant. That's our mnemonic SOC. Charge for service is exchange. Operating grants and capital grants are what? Non-exchange, and we didn't get very far. We showed our expenses first. We defrayed our expenses with our program revenues, and we reported net expenses, didn't we? And we followed public safety through as 982,000. Okay. Then what? Then when we got to the lower section, there were taxes of all kinds, property taxes, whatever. And then if we had some sort of money that came in from investments and whatnot, we could also report that down in that bottom section. Then what? Then we showed both direct and indirect expenses, and we focused on public safety. Remember we had that 35,000 for the indirect? I think it was 1,025,000 for the direct. Okay. Okay, so the statement of activities is a government-wide statement. The accountability of our government-wide statements is what? Operational accountability. Okay, good. All right, so we can stop there. We'll take the break. What we did was we talked about the what? Two government-wide statements, full accrual statements, net position, and statement of activities. And all we really did there was understand the structure of their statements. Notice there was no balance, I should say journal entries in there, right? It was simply, here's the statements, here's how they're arrayed, here's how the information is positioned on those statements, right? Okay, but you are going to be expected to understand the workings of those statements and how they are presented, right? Okay? Okay, good. Let's go ahead. Let's take the break. We'll take about 15 minutes and we'll come back and pick up starting to talk about our fund statements. If you came in late, please come and see me because I took attendance. Okay, up here, guys. Let's go ahead. Let's jump ourselves back in. Now, as I said, it is important that you know the names of all the statements. So we already know the government-wide statement names are statement of net position, statement of activities. Okay? Now, on this slide, I'm giving you the names of the statements for the fund categories. How many fund categories? 11 funds, 3 categories. Okay, we have governmental funds, we have proprietary funds, we have fiduciary funds, right? Okay, when we are at the governmental fund, we prepare 2 governmental fund financial statements. One is a balance sheet, which is like the balance sheet. The other is called the statement of revenues, expenditures, and changes in fund balance, which is like the income statement. At our proprietary fund level, this is the only level that prepares a third statement. So they all prepare balance sheets and income statements, although we don't call it that. Okay? But only the proprietary funds. What are our proprietary funds? What are our proprietary funds, Ty? Good. Internal Service Fund and Enterprise Fund. Very good. Okay. The S and the E and C tip, right? Okay. All right. Good. So we have a what? We have a like balance sheet, which remember I told you it's similar to the statement name for our government-wide balance sheet. It's statement of net position, and the format is very similar. Okay, and then the income statement is not called the statement of activities. It is called the statement of revenues, expenses, and changes in fund net position. So a little bit different name, but that's like the income statement. And then we have what? And then we have a statement of cash flows, which is like a statement of cash flows, and only the proprietary funds prepare a statement of cash flows. Only the proprietary funds prepare a statement of cash flows, a third statement. Everybody else prepares 2. Government-wide has 2, a balance sheet and income statement. Balance sheet is called the statement of net position. Income statement is called the statement of activities. My governmental fund has a balance sheet and an income statement. Balance sheet is called a balance sheet. And the income statement is called the statement of revenues, expenses, and changes in fund balance. For my proprietary funds, they're the only ones that prepare the third statement, statement of cash flows. Is like a statement of cash flows. Balance sheet is called the statement of net position, and the income statement is called the statement of revenues, expenses, and changes in fund net position. When I get to my fiduciary funds, then what? I have 2 statements again. Balance sheet, income statement. The balance sheet is called the statement of fiduciary net position, and the income statement is called the statement of changes in fiduciary net position. Why are these titles in red? You have to know them. You must know the names of these statements. Question? Okay, good. Let's talk about our governmental funds. Governmental fund, general fund, special revenue fund, debt service fund, capital project fund, permanent fund, right? General fund, for our governmental funds, current financial resources measurement focus, modified accrual basis of accounting, right? Hello? Okay. This means that what? This means that when we buy something like a capital asset, we don't debit asset, we debit expenditure, we credit cash right now. That's the only difference between full accrual and modified accrual we really talked about. Okay. If there are fixed assets, if there are no fixed assets, I should say, can there be depreciation? No, there's no fixed assets, there's no depreciation. There's another difference. Because under full accrual, you report depreciation, don't you? Okay? Okay, good. Now, the format for the balance sheet follows your favorite song format. Assets equal liabilities plus stockholders' equity, and then we report what? The total of liabilities and stockholders' equity so that it matches the amount of assets that you learned a long time ago. Okay, like I showed you for the balance sheet, that's what we do. Although it's not long-term assets, it's now what? Current assets only, current liabilities. But we do report the total of what? Liabilities and stockholders' equity, but we call stockholders' equity fund balance, which is like retained earnings. Right? Okay, this is the required format. Now, deferred outflows are like assets, but not quite. So we put them with the assets. Deferred inflows are what? Like liabilities, but not quite. So we put them with the liabilities, right? So that bottom line that we report is really what? Current assets plus deferred outflows equals what? Current liabilities plus deferred inflows plus fund balance. Okay, and I already showed you this earlier. Current assets, current liabilities. There's my $2,087,000 for my total assets. And then I come down and I have my liabilities. $460,000. I add that to the total of my fund balances, $1,627,000 for my general fund anyway. Does that equal the $2,087,000, which was the amount for the assets? Hello? Just like you learned in, I said accounting 100, whatever, business 20, when they showed you a balance sheet, it balanced because assets equal liabilities plus stockholders' equity. So it's just that format. Okay? Now, we take the fund balance, guys, which is like retained earnings, and we break it into 5 categories. So when we look at our fund balance will either be called non-spendable, or it can be restricted, committed, assigned, or unassigned. So we really break it into categories as to whether it is spendable or non-spendable. Non-spendable means you can't spend it like cash. Spendable means what? You can spend it like cash, but some items are harder to spend than others. And they list them in order of how difficult they are to spend. So if something is restricted, it is very difficult to spend. If something is committed, it's hard to spend, but not as hard to spend as something that's restricted. If something is assigned, it's hard to spend, but not as hard to spend as something that is committed. And if it's unassigned, that means it's not hard to spend at all. That's sort of like unappropriated retained earnings. So these are listed in order of what? How hard they are to spend, aren't they? How hard is it to spend something that's non-spendable? Impossible, because it's non-spendable, right? Something that's restricted, a little harder to spend, but you got to spend it in compliance with the restriction. Something that's committed, a little harder to spend, but you have to spend it in the context of whatever the commitment was. Assigned, a little harder to spend, a little easier to spend if I'm going from hardest to easiest. But you have to spend it in what? In accordance with whatever the assignment was. Unassigned means you can spend it however you see fit. Okay? Now, I gave you a mnemonic for the spendables. And so the spendables here, and this says most difficult to easiest is the order here. Okay? And so the mnemonic for the spendables is Raquel. Have you ever met Raquel? Raquel is a great guy to hang out with because he's always buying everybody drinks and lunch, and he's got all this jewelry dripping off his fingers and stuff because he's spendable. Raquel, you ever hang out with this guy? You should meet him sometime. He's great, Raquel. Now, if you don't like that mnemonic, come up with your own or just remember this. But you have to remember them in order of most difficult to spend versus what? Easiest to spend. Okay, so the most difficult to spend is non-spendable, and then when you start listing spendable ones, the order is Raquel: restricted, committed, assigned, unassigned. Now let's talk about this non-spendable. Do you see non-spendable inventory is 55,000? Do you see that number? Non-spendable inventory is 55,000. Do you see that? Okay. Now, if you go back up to the balance sheet, do you see inventory is 55,000? Huh? Do you see inventory 55,000? Who keeps saying no? Do you see inventory 55,000? What's wrong with you? Inventory 55,000, non-spendable 55,000. Same number, right? 55,000. Okay. Now, we're calling that particular item out as non-spendable. Try it sometime. Go to Costco and buy yourself a big 25-pound sack of nutmeg. You like, really? 25-pound sack of nutmeg for only $5? You get it home and you're like, what the hell am I going to do with a 25-pound sack of nutmeg, right? So you go to Safeway and you say, nutmeg for milk? I give you nutmeg, you give me milk? And Safeway will say, I don't think so. You got any cash? They're not going to exchange an inventory item for something, are they? Okay, so if you've already spent your cash, your current asset cash, let's say, on what? On inventory, then you can't spend that anymore. It's non-spendable, right? So we call that out as non-spendable. Another example of non-spendable, what if you prepay your insurance? If you prepay your insurance, can you take your unexpired, car insurance to Safeway and say, hey, give me some milk and maybe you can get this insurance for your car or something? You can't, right? So prepaid items would be considered what? Non-spendable. Okay? Now, our spendable are going to be constituted of cash and receivables. We still consider them spendable, right? But if we put some sort of constraint on them, then we have to call them out as restricted is the most difficult, then committed, then assigned, then unassigned, right? Okay? Okay, good. Now, when you look at this next slide, then, non-spendable is the hardest to spend, not cash or receivables. Example, we've seen inventories. I gave you the example of prepaids, right? Can't spend them like cash. Okay, then what? Then we have restricted. And if something is restricted, that means that external parties have directed us how we have to spend that money. Entities that are external to the government have directed how we're supposed to spend that money. For example, let's say we're going to build a county courthouse, and we need the money to build the county courthouse. So we go to bondholders and we say, hey, invest in these bonds, and we'll use this money to build a county courthouse. And any money that's left over, we will keep on hand to make sure that we can meet the debt service. We can pay interest and principal on this, right? So we have to spend that money on what? The county courthouse, and any money that's left over has to be set aside for debt service. So that money is restricted because we promised those bondholders external that this is what we'll do with this money, right? So if we have an external restriction that we have promised what? Creditors, bondholders, grant providers, how we're going to spend that money is restricted. For example, federal government gives us money and says, hey, here's some money to help you out with that county courthouse. Now, federal government likes to do that kind of stuff because what? You're going to have to employ people to work on that county courthouse, and if I'm Congressman Logioni from, Hayward District, I'm like, hey, I want to get my people some money so I get reelected, right? Okay, and so what happens if the federal government gives you that money to build that county courthouse because it's going to increase in employment or something, then that money is what? Restricted, right? Because the federal government gave me the money. Did I hit record? Yes, I did hit record. Very good. Good job, John. Okay, thanks. Okay. Now, another restriction would come if enabling legislation directed us how we're going to spend that money. Now, enabling legislation is the legislation that allowed you to tax that money to begin with. For example, state of California passes a law that says they're going to take money from your check, and that money is to use to fund the state disability insurance fund. Before they passed the law that said they were going to take the money from your check for the state disability insurance fund, they didn't have that money at all, did they? So the same law that enabled them to take that money also calls out how they're going to spend it. We consider that restricted. Now, in this case, you're saying, well, wait a minute, John, that's not really outside the government because the government's the one that passed that law. Yeah, but it is so hard to change a law in which there was no tax being taken before, and what? Now they take the tax and they call out how it's to be used. Try and go ahead and pass the law that says, well, you know that money that we used to take for this before? Now we're going to still take it, but we're going to use it for something else. That becomes what? A very difficult legislative feat. So even though that's not quite falling under our definition of external, because changing that law would be so difficult, they call it restricted. Okay, so what are our categories of restriction? We have what? Bondholders, essentially. Debt, right? Creates a restriction. The what? The external grant causes a restriction, and enabling legislation causes a restriction, right? Okay, good. Committed. Committed means that the highest decision-making authority in the government has passed a formal resolution as to how some money is to be spent. Formal resolution means they've passed a law that says how certain money is going to be spent. Now, in this case, it's money that the government already had, but they have earmarked now a certain amount of money for certain purposes. Okay? Now, first off, what's the highest decision-making authority in the government? Huh? Well, you wanted to say the president, though, right? Because we tend to think of the president as the king, right, or queen, whatever. We haven't had a queen, but maybe this next time we will get one. Whatever. Stop, John. Okay. Okay. Okay, well, we're not in Canada. Okay. So does England. We haven't had a queen. Okay, so what happens? We sit here and we have what? We have the president, but when it comes to spending money, the power of the purse, very good, is with the what? Legislature, right? Okay, so when we're talking about spending money, the legislature has decided how that money is going to be spent. Okay, for example, let's say we're a city council, and we're looking at school sports, and we're saying, we're going to have to cut out school sports. Or we have a school board, we're going to have to cut out school sports because we just really can't afford to continue to fund sports anymore when we have other educational goals, right? Somebody says, wait a minute, we've got this pot of money sitting over here that we've basically raised because we've had football games and different sporting events that we charge for and stuff. We're going to set that money aside for school sports. So what do? They earmark a pot of money they already had. This was not enabling legislation. This was a pot of money that they already had from various activities. They have now done what? Earmarked it, and they pass a resolution. Now, to go back and change that would be pretty difficult, but it's a little easier than changing what? an enabling legislation type thing, right? You're simply saying, well, this money we already got, we were going to use it for this, now we're going to use it for that. They still have to go and get the legislature to agree, and sometimes it's very hard to get legislatures to agree on these kind of things, but it's not nearly as difficult as what? Enabling legislation. So this committed is very similar to the enabling legislation, but enabling legislation, because of a more difficult hurdle, goes into restricted, whereas here a formal resolution goes into committed. Okay? Then we have what? Then we have committed. That was committed. Now we have what? Assigned. Okay? Assigned means that the city managers, the managers of the school district or whatever, have decided how that money is going to be used. So what happens? We give money to the school district and we say, spend the money on education. Now, can you have education if you don't have any electricity? Well, I guess, Edison would say, well, yes, I did fine with education, and we didn't have any lights on in my school. And look what I did. Okay, but, these days we need electricity, right? Okay, so what happens? The school board decides that they're going to acquire solar panels. They're going to acquire solar panels because what? Because that can provide electricity that can be used for education, right? So they're going to put solar panels, right? Then one day, it comes to their attention that all of their history books say that George Washington discovered America. And they're like, huh? George Washington didn't discover America? Uh-oh. Okay. So now they've got to acquire a whole new set of textbooks that correct this problem. And they decide that that is more important than what? Than the solar panels? They simply changed their mind, right? They had a pot of money that they could spend on education, but as those that have been entrusted with that pot of money for education, they can put it here, they can put it there, depending on whatever they believe the priorities are, right? So it's much easier to change your mind than having to go back to the legislature and say, will you guys vote again as how we spend this money, or having to go back to what? Go back to enabling legislation and say, well, now that money that we didn't have before, we're going to use it for this. And of course, if you've already agreed with the external parties how you're going to spend the money, that's a contract, isn't it? So you're not going to be able to change that. Okay? Finally, we get to unassigned. We get to unassigned. And for unassigned now, what happens? Hey, we haven't decided yet how we're going to spend this money. Yes, we have to spend it on education. We get that. But we may spend it on solar panels. We may spend it on books. We may spend it on pencils. We don't know yet how we're going to spend that money. We know it's got to be education, whatever, because we can't go to Vegas with this money. But what? We're going to sit here and we're going to call it unassigned because we really haven't decided how we're going to spend it yet. Okay? Now, only the general fund can have a positive unassigned fund balance. If another fund has an unassigned balance, it has to be negative. General means what? General. It means this money can be spent on a number of different things. It could be spent on public safety, could be spent on recreation, whatever, right? All of the other funds, their money is spoken for. If I have a capital project fund, I have to spend it on capital project. If I have a debt service fund, I have to spend it on debt service. If I have a special revenue fund, I have to spend it on, say, road improvement, right? So all of our other governmental funds, their money is spoken for, so there is no free-floating money that can be spent on whatever, right? So only the general fund can have money that can be spent on whatever, and that's why we have a general fund. The general fund sits there and does what? It helps out the other funds if they run short. So only the general fund can have a positive unassigned fund balance. Now, let's see. I guess if I go to slideshow, it doesn't show me these. It does now. Okay, thank you. Okay, so let's just take a look at an example here to see how we would have a negative fund balance in one of the other funds, say the capital project fund. So let's say I'm going to build a county courthouse. Building a county courthouse is a capital project, right? And so let's say I issue some bonds and I get $200,000 cash for these bonds. Now, obviously, you can't build a county courthouse for $200,000, but humor me, right? So I get cash at $200,000, right? And that's on my balance sheet. Do I report a long-term liability on my governmental fund balance sheet? I do not, so there's no bond payable, right? Now, let's say I had some inventory sitting around that I could use on this county courthouse. I don't know, I had some sheetrock and some nails or tiles or something from another project that I'm going to use and put into this capital project fund, right? So I have inventory of $20,000. Now, before I get ready to start my construction, I have to do an environmental study. Often this is the case to see how you're going to affect traffic patterns. You're going to kill the wild mouse, the fluffy mouse, whatever. All these different things that you have to sit here and do for an environmental study. So we want to get started on this, and so we want to hire an environmental study company. Okay? But when we read the bond covenant, it says you can't spend any of this money from the bond on soft cost. It has to be brick and mortar type cost. Sometimes they'll write that in. And we look and it's like, hey, an environmental study is a soft cost. It's not a hard cost. So we can't spend any of this money that we have, this $200,000, to pay for the environmental study. But we can't really get started until we do what? Until we do the environmental study. So we go ahead and say, hire the environmental company. Go ahead, hire them. They do the study and they bill us $30,000 for the study. Now, do we have a liability? We have a liability of $30,000, don't we? Okay. Now, when we report our fund balance, we have non-spendable. That's the inventory, don't we? We do have $200,000. It's restricted, though. It has to be spent on building of the county courthouse, the hard costs, right? So my assets equal liabilities plus stockholders' equity. I have a negative unassigned fund balance, don't I? Negative unassigned fund balance of $30,000. So what's going to happen here? How am I going to pay that $30,000? The general fund's going to say, hey, capital project fund. The general fund's kind of like the Godfather. You ever seen that movie, The Godfather? Right? The general fund says, I understand you have a small debt that you need taken care of $30,000. Here you go. Go ahead and pay that as long as your interests don't conflict with ours, no problem. They always say that in the gangster movies, right? As long as your interests don't conflict with mine, and then you sit there and you go, uh-oh, their interests are going to conflict. Watch. Okay, so what happens? As long as your interests don't conflict with mine, here's the $30,000. So the general fund will probably send the money over, won't they? And I'll be able to pay this bill at some point. Okay, but that's why the general fund has this positive unassigned, because it can do that kind of thing. Whereas everybody else, their money is called out for some purpose. So they could end up with a negative unassigned, but they're going to probably hope the general fund will help them out, right? Okay. Okay. So once again, we have what? We have our categories, which are remembered by what? They're non-spendable or spendable. Non-spendable is the most difficult to spend. Hello. It's things like what? Not cash, like inventories and stuff. Then we have what? Racal is spendable. Racal spends all his money, right? Buying drinks and all that kind of stuff, right? And so what? We go from hardest to spend to easiest to spend. So restricted, committed, assigned, unassigned, right? And I've given you some examples of the things that constitute these different categories. Let's try this exercise. Okay? So, the City Fire Station Capital Projects Fund has been funded by a bond issue. The covenant of the bond issue, do I need to read any more? That money is what? Restricted, right? Okay, good. The City Maintenance Capital Project Fund has been funded by money set aside by the City Council. Is the City Council the legislative branch of a city? City Council is the legislative branch. Are they the highest decision-making authority? when it comes to spending money. So that money is committed. Good. The city library debt service fund accumulates money to meet the debt service requirements of the library. The covenant of the bond issue. Do I need to read any more? This money is restricted, right? Okay. Grant general fund resources that are limited as to use by constraints imposed by, this really should say what? By enabling legislation, because law, it does say enabling legislation, but it took them a while to get to that. Law could also be constrained, couldn't it? So this isn't the best question, but by the time we got to this phrase enabling legislation, then what? Then that money becomes restricted, right? Only the general fund can have a positive unassigned fund balance. Everybody else is going to be what? Negative. Okay. That is the format of the balance sheet for our governmental funds, right? Current assets, current liabilities. We report the total of our current assets and current liabilities down there. We're still in structure, aren't we, right now? We have our fund balance, and we have these different categories for fund balance. So next time, because if I try to drill this into your head right now, you will explode. Okay, so next time we are going to start talking about this operating statement for our governmental funds, which is going to be our statement of revenues, expenditures, and change in fund balance. And we'll start to understand the structure of that. So we're still on structure, guys. I think I said next time we'll deal with revenue recognition. Probably not. We'll probably stick with Chapter 2, finish Chapter 2 next time, and then we'll get into revenue recognition. Okay, guys.
Sorry about the Reichstag comparison.
Oh, no, it's okay. No, no problem. It may very well look like that.